Hello and welcome to Money Reimagined. I'm Sheila Warren. About 3 years ago, I and a couple of colleagues at the World Economic Forum convened a design workshop in San Francisco for technologists who work within central banks. The goal was to connect them with technologists in the blockchain ecosystem who could demystify cutting-edge technical developments in the space. The workshop was a huge hit and led directly to the creation of a private global learning community. Over the next 18 or so months, the group convened monthly, surfacing questions that we then sourced experts to explain and discuss. Our goals were twofold. First, to connect central bank technologists with each other across disparate economies and geographies. And second, to ensure that they received accurate, non-shilly information about the benefits and risks of blockchain technology. Now, I should note that this work supplemented deep research in digital currencies that many, if not most, central banks were conducting in parallel, whether that was on their own or in small groups. The group eventually asked us to create a toolkit for their policy colleagues to help demystify central bank digital currencies, which are colloquially known as CBDCs, central bank digital currencies. We released that toolkit in Davos in 2020. Fast forward a year and change to now, the discussion around CBDCs has become almost commonplace. The question now seems to be when, rather than whether, large economies will go public with discussions we know they've been having internally for over 3 years. In fact, we had an entire episode of this show on China's large-scale DCEP pilot, something that most people have considered unimaginable 3 years ago. And Chairman Jay Powell of the Federal Reserve has recently said that this year would be a pivotal one for the digital dollar. From the very beginning of our engagement in the CBDC space, it was clear that while experimentation was happening in many places around the world, some of the strongest innovation was occurring in smaller, more agile economies. Cambodia is such a place, and today we'll be talking about its Bakong system. Launched in October 2020, Bakong is a blockchain-based payments and banking platform. It offers a range of services, including the ability to transfer money, make it accept payments, and track transactions. It operates via a network of Bakong banks, which serve as on and off ramps to the system. The project has been in the works since 2017, and though it's sometimes referred to as one of the world's first central bank digital currencies, Cambodia actually views it as a foundational payment system. We'll be speaking today to two individuals who were instrumental in bringing this project to life. First, we're joined by Her Excellency Sari Chea, who is Director General at National Bank of Cambodia. She's a vocal proponent for greater use of the local currency to promote the country's greater independence on economic and monetary policy. She's also a member of the Southeast Asia Advisory Council of Women World Banking and a member of the 2019 class of the World Economic Forum's Young Global Leaders. We'll then bring in Makoto Takamaya, the co-founder and CEO of Sorimitsu, a Japanese fintech company specializing in blockchain technology and digital identity. He's a computer scientist and one of the lead programmers and architects of Hyperledger Iroha, a distributed ledger project. But first, let's welcome my co-host, Michael Casey. Hey, Michael.
Hello, Sheila. Silence. I'm just leaving it up to you. What do you want to talk about?
I mean, you, right? So let's chat a little bit about the movement around CBDCs in the past few years, right? So certainly a digital dollar was kind of an anathema concept. There was a lot of resistance to this idea from parts of the government and just focusing here in the United States. But now, it seems that really every economy in the world is talking more publicly about this. Now, as I noted, we know that these economies have been, and central banks or even treasury departments have been thinking about this and researching this topic for quite a long time. But now it's kind of okay to admit this publicly. And what do you make of that?
There's a real sense of urgency right now, and I think it's hard to separate that from China's progress. And I think it's a separate question than the ones that we'll be addressing in today's episode, where we'll be talking about smaller countries like Cambodia and what they're doing, which I think is a very specific sort of initiative. But where we talk about the Fed and the ECB and these other larger central banks, really sort of it's seemingly accelerating their efforts. I think there's a geopolitical component to it, that there is a real concern that, central bank digital currencies will end up reshaping the sort of political structure of the global financial system. We saw that China just, a week ago, more or less, entered in with the Bank of Thailand, I believe, and the United Arab Emirates to create a sort of interoperable digital currency-based payment, cross-border payment system, which is a direct competitor to SWIFT, the largely kind of US dollar centric cross-border payment system. And that has huge implications for, you know, money flows and ultimately, as I've argued repeatedly, for the sort of supremacy of the dollar as the world's reserve currency. So there's a lot of really big issues around that. But I'm really looking forward to diving into, you know, what I think got many people interested in digital currencies generally, whether it is, you know, crypto like Bitcoin, or in this case, you know, central bank digital currencies. And that is, you know, how can this be beneficial to human beings? You know, what are the advantages, and also what are the risks associated when we take these currencies, make them digital, and bring them into the retail realm? So I'm looking forward to discussing that with our guests today.
Yeah, as am I. You know, it's hard to see, to your point, the work of some of the really large economies and separate that from the politics of it and kind of the power, you know, the desires to keep or grab power. But some of the smaller economies, I think that you're right, and motivation is different. I mean, there isn't a question that some smaller economies are suddenly going to become necessarily the world's reserve currency. And so the motivation, I think, is interesting to experiment with and to talk through.
I will say, Sheila, though, even though these are, I think, quite separate motivations, you know, and we'll hear today from Her Excellency Sarah Chair about this, the role that even for small countries like Cambodia, that these currencies can play in sort of striving for independence. And that issue is itself, I think, inseparable from the global financial system. You know, I think that one of the criticisms of the dollar's dominance has been how it leaves small economies beholden to, in some respects, you know, the whims or rather the economic conditions that exist in the United States, right? When the Fed goes on a big quantitative easing campaign, or in reverse, it starts hiking interest rates, this sort of rolls down into these smaller economies as global money flows get dictated by that. And I think that creates huge problems for monetary policy and general policy setting within these developing countries. So it'd be interesting to hear, you know, that perspective, which, as I say, I think is an element of this big international situation.
Yeah, and something we've discussed on this show previously is what dollarization can mean for an economy, and the positive, but also the negative that can come with that. But let's turn to our guest to learn more about the motivation. So, Your Excellency, I'm very curious to hear about the motivation behind Bakong. And from what I understand, the name itself is a little revealing, perhaps. Bakong was a Cambodian temple, from what I understand, built in the 7th century, that then became the basis of the design for a monument in Phnom Penh, which commemorated the country's independence from France in 1953. So as you've said in previous talks, Bakong is a symbol of sovereignty and independence. But I'm curious to hear from you, what was the motivation behind this exploration of the project and then deciding to go forward with it?
Well, thank you, Sheila and Michael. The initial motivation came when we realized that our payment system landscape was very fragmented. So we've got our banking system providing mobile banking service to its users. And then the banking system serves people in the urban area. And then we've got the payment service provider or the e-wallet provider, as you know it, who are regulated as payment service, as technology company, basically, to a much lesser extent than banks. And their service mainly target people in the rural area. And the due diligence or the KYC to open a wallet account is much less than if you were to go and open a saving account. And therefore, it was a very sort of an attractive premises for a lot of users. And so we start seeing the users of the payment service providers completely disconnected from the payment, from the user, from the banking system. And in our missions to promote banking financial inclusion, the goal is not having people open wallets account. The goal was having people open a bank account, a saving account. And so if we keep these two industry disconnected, eventually we won't have it. People may get confused that wallets is a form of saving, which they are not. And then may probably sort of go away from the banking system altogether. And then what we see the problem here is also that people within the payment system, the users of the e-wallet providers, they tend to sort of cluster itself. So if you are the user of the same service providers, you can transfer money to each other, but you can't transfer to user from a different service provider. So basically, if you use, it's kind of like your cell phone, when if you use different service providers, you can't call each other. So it was very fragmented, it was quite messy. And so we thought, how can we bring everyone onto the same page? How can I allow a bank user to send to an e-wallet user and vice versa? And so we were actually exploring different sort of technology to do that. And one that came to us was we could do the same ways as how we did for banking system, which we will bring the bank into the central bank account. So you create a settlement account, everyone become the part of the central clearinghouse. And then once you connect it to the central bank, then everyone can sort of speak to each other through that centralized system. And the problem as we encounter was that when we regulate the e-wallet provider as technology company, bringing them into a sort of a regulated environment, like being a member of a central clearinghouse, requiring them to manage their liquidity in a way that bank would have to manage their liquidity for payment and settlement purposes, would actually add a burden in terms of regulatory compliance, and the cost will eventually pass on to the users. So we had to find a system that allow us to bring them together, but without adding additional burden. And so, of course, we were exploring different technology, and we came across Suramitsu, which proposed sort of the peer-to-peer way of transferring, of connecting different parties together. So with this, and maybe later Makoto can explain on the technology side. So basically, now what we have is that the payment service provider don't have to open a clearing and settlement account with us. They just need to hold the backbone digital money. And then once they have this themselves in their sort of vault, e-vault, they can distribute it to their end users, and the end users can only transfer when they themselves have money in their wallets. So in a way, it takes away the mess of managing the account at the central bank level, where you would have to provide liquidity facilities, overdraft facility, if they don't have enough to settle the other party. So with the peer-to-peer, we sort of eliminate that sort of intermediations and of course costs as well. And it was quite easy to implement, and anyone can come on board through the API. So now we have about 21 members and 26 more coming along.
So I want to go back to something you noted about how one of the motivations here was that you had fragmentation in the banking system. And so was it challenging to get the banking sector to come on board? I mean, how are they motivated? Was there any resistance from the banking sector? I imagine there might have been some benefit to an individual bank to have fragmented systems. So how did that work?
So I think that is the benefit for small country and to start very early on, is that if you wait until somebody really grow and too big, it will be very difficult to convince this particular users to come and join the others, because what is the point of using when you're already, having all these market shares? And so this is probably something to lesson learned from us, is that we were lucky to start very early. Nobody was actually dominant in the market. And so when we proposed that, everyone was kind of willing to join. I mean, some were resistant, but with a bit of push and carrot and stick, everyone eventually joined. So and we still make it voluntary. It's not compulsory. It's voluntary, but we already have 21 on board and 26 more coming. So that's a pretty good sort of deal for them to join, obviously.
So listening to this, it makes me think of the kind of interesting way in which money itself has evolved over 500 years, where banks have played this critical role in many respects of creating the money of our time. So, I don't need to tell you, of course, central banks, issue the currency, but the creation of money in many respects is actually the credit and depositing process of our banking system. Does this change this? And where is, where do you define the difference between what, central bankers call M0, which is, local currency, and say, M1 and M2, the banking based system of money? I'm just trying to see if we can break that down so we can get an understanding of what we're talking about.
So initially there's a confusion that what we were issuing is a central bank digital currency. And I'm sure there are a lot of technical elements that make it similar to a central bank digital currency, but from a policy perspective, it is not. So the questions as to what is the role of money, what we're doing is pretty much like any other wallet that you're using right now, where you exchange fiat money against the digital version of it. So we're not creating new money. We're not gaining any seigniorage from it. So that's the difference between what we're trying to do and the CBDC as well. In terms of its impact on the monetary policy, again, we're not adding any new money. So this is basically for us is equal to M0. So it's equivalent to cash. One, it is in the wallet of the end users. It would be considered as cash in terms of accounting treatment. As far as the central bank is concerned, this is cash as well. So the way we treat it in our accounting is pretty much like the cash issuance that the central bank would normally issue.
Okay. That sounds to me like it is a central bank digital currency, but it's I suppose the way it's connected to the banking system, which separates that. Again, so just to get people's, because there's so many different models out there, how does that distinguish, other than the fact that it's one that is mandated and coordinated by the central bank and therefore has an official role in it? How does this differentiate from, say, what exists now in the United States with things like Venmo and PayPal and even in China, we pay, and the others which reside on top of the banking system and allow, that payment, peer-to-peer payment system on top of it? What would you say is the distinguishing feature of what you've built versus those systems?
Again, I think it would have to go back to the accounting treatment. I mean, from the technology perspective, once you hold that money in your wallet, it should belong to you because there's no replication of it, right? And so that's from a technology perspective. From the legal and accounting perspective, we can differentiate that. So the way we treat it is that, let's say, because the distribution is not directly from the central bank to the end user, the distribution is from the central bank to the financial institutions that we regulate. So we only issue it to the financial institutions or the e-wallet providers, and then they has the responsibility to distribute it to their users. And so when it go to their users at the central bank level, we wouldn't know who are holding what. All we know is that this money belongs to this bank. That's all we know. The other sort of characteristic of our Bakong is that when you normally hold cash as a CBDC, it's belong to you. Let's say the banks go bankrupt. The money should belong to you. So the provisional administrator, for instance, can't go and take that money away from you, correct? Because it's like cash, it's already in your pocket, right? They're not going to ask it back from you. The way we treat the Bakong is that we treat it like the e-money. So meaning it is in your pocket, but if that particular bank goes under bankruptcy and the provisional administrator come to us and say, look, we need to take hold of whatever asset the bank has, we will give them the balance that they have at the central bank as the total asset of the bank. And in that account or that balance that they have with central bank would also include money that people would hold into their pockets. So the moment the provisional administrator, for instance, sees freeze all the account, I, as the end user, won't be able to transact anymore. So that's the differentiation. I think the main differentiation with the CBDC or the cash that you would, or the digital cash that you would normally hold. It's a bit complex. I'm not sure.
It's very interesting. It's actually using the banks, I would say, as a distribution mechanism. But, you know, but putting them between you and the people is an interesting way as well to remove that surveillance, you know, and address some of those privacy concerns, which we can talk to a little later. But I think, Sheila, you wanted to bring Makoto in at this stage.
Yeah, I think I would love to follow up on some of these, because there's technical design elements to this, right, that are really critical. And so I would love to hear about some of the technical design choices. Makoto, it's hosted on Hyperledger Aroha, of course, but I'd like to, maybe we just start with the use of blockchain in Project Bakong. Like, how are you using a blockchain, and maybe what consensus approach, or just give us some kind of overview of the blockchain aspects of this. And then we can move into, I think, some of the really interesting questions about privacy and surveillance opportunities and things like this. But maybe we'll start there.
Okay. Yeah, so blockchain, I think, is a natural fit for this type of system that unifies many different actors. So you're trying to unify payment space between end users and payment service providers and banks. And blockchain provides kind of like a digital scarcity, right? So if you have these digital assets, it's like a bearer asset, similar to cash in many ways. But of course, there's different accounting nuances with this system in particular. So it seemed really natural to use blockchain for this, because you needed a way to confirm digital scarcity among all these different actors. And then you have fungibility within the system, so long as users are allowed to transact the digital tokens that are being used. Another aspect that came into mind was the need for multiple currency support. So many settlement systems only use one currency as a main currency. But in Bakong, we need to support not only the local currency, the Khmer Real, but also the US dollar because of high dollarization. And so having a blockchain where you can easily create many different assets gives you lots of flexibility. And in the future, this could even be extended to other types of financial instruments. It doesn't have to be only currencies, for instance. So that was part of the thought that went into it. Also, from a security standpoint, we wanted something where, if there's a central database that would be hacked, that would be really bad. And so using blockchain that has consensus, where each end user is signing the transaction and there's cryptographic proof of the transaction being, officially signed, it's really, really hard to do some kind of bad activity in the system. So it's not like a central database exists that you can just change some account balances. Instead, you'd have to, go into everyone's phone in the system, which is quite a difficult thing to do if there's millions of users, right? So it kind of changes the risk profile from being really centralized area of attack to having, really diffuse risk profile. So that was part of the reasoning that went into using blockchain. I probably don't need to tell so much the CoinDesk audience, but Bitcoin and other open blockchains and public cryptocurrencies are very slow, and they use lots of electricity for mining and things like that. That, of course, was not something that would work in a central bank payment system. So instead, what was needed was a secure system that the central bank could run and that didn't use mining and was really fast and had not just probabilistic finality, but absolute finality. And so that's why we provided Hyperledger Iroha, which uses supermajority voting among the different peers in the system to finalize transactions. And this happens in a very quick way because the system is, the infrastructure is very centralized, even though I would say the business logic is very decentralized because all of the transactions are being signed at the end user devices. So what this gives us is the ability to create and confirm transactions within 3 to 5 seconds very consistently, which is, and I think this can get better in the future as technology evolves. But this is already fast enough for retail payments compared to physical cash that you would hand somebody at a store. It's much faster, right? You don't have to deal with change and all these different things. So there's many advantages of using a system like this and using blockchain in particular.
So maybe if you can, Mikhail, to go into a little bit of the structure and the intent there. You talked about almost immediate finality, and that of course is a critical concern in when you've got banks involved. So is that achieved simply by the fact that it is a permission system and that doesn't have all of that sort of computational overload that a permissionless system has, or are there other kind of bells and whistles in there that make the system more efficient? And I'd just be interested to know, whether if there is a move towards more permissionless systems elsewhere in the world, right? All the developments that I'm sure you're aware are happening around Bitcoin and everything else with Lightning and things like that. Whether there is any capacity for this to sort of migrate under that sort of system, whether there be any benefits for having a more open system.
I would say there's two technological benefits to having a permission system. One is it gives you some clear assumptions that you can make about the computing hardware and the capacity of the system, and this is very important when having a systemically important infrastructure. Additionally, by permissioning it, you do get some greater security, because you know exactly who the actors are who are running the nodes and where the nodes are. You don't have to have the computational challenge that Bitcoin has with something like proof of work mining or even proof of stake, because you don't need this competition, because all the entities are permissioned. And so this makes it makes a lot of sense in a system like this. Now, technology changes a lot, right? And so even public blockchains are getting much faster. And so an example would be something like Polkadot, where within 20 seconds now you can get finality through what's called grandpa consensus. And that's really interesting. And it's an interesting space to look at, and it's going to get only better over time. There's disadvantages to using a public infrastructure, especially without encrypted or private transactions, because there is some possible surveillance that could be done. Even with pseudo-anonymous accounts, you could de-anonymize the accounts using different graph theoretic techniques. And so it doesn't really work, I think, for a large-scale central bank payment system. Maybe for really small countries like different island nations who don't really have money for large amounts of infrastructure, using a public blockchain could make sense. But in Cambodia, I mean, it's small compared to China or something, but it is still a fairly large country. There's almost 18 million people, and so having a system that's kind of dedicated to the payment needs of this specific populace, I think, makes a lot of sense.
And this goes back to something I think that we push on a lot here on this show, which is, what is the problem you're trying to solve and what are you designing for, right? And so it is a very different proposition to be designing for a very, very tiny nation that is pretty independent, or that is fully dollarized, for example, versus one that has use of different kinds of currencies and has a different problem space. And so I'm curious, one thing that comes up a lot, though, pretty consistently across all these different use cases is the concept of programmability. And so having a payment system that allows for more programmability. And I'm curious to hear if that was a high priority in this particular project, and how you've designed for enhanced programmability using the system.
Well, I'm sure Her Excellency has some thoughts on this as well, but at least from my perspective as a technologist, having too much programmability actually is a bad thing, because it increases the possible attack vectors. But that being said, the forward extensibility of a system like this is really nice, because you do have a very specific protocol that you can use to transact within the system, and you already have distributed consensus that manages the digital scarcity of the assets involved. And so it makes it really extensible into the future. So if you wanted to have something like a wholesale security settlement, that's fairly straightforward to do compared with building a system from scratch, right? You could even have different conditional logic. So for example, something like a financial instrument, like a bond, some kind of yield-bearing instrument, where the yield could be automatically paid upon maturity. So things like this, I think, can simplify a lot of the processes. I think it'll take some time to kind of move things into that direction, just because it's better to be conservative with systems like this and not try to do everything at once, because that could possibly open up new areas of attack, which would not be good. So so it should take some time, but the forward extensibility of using a blockchain system, I think, makes a lot. It makes things very interesting. We haven't yet talked about things like monetary policy, but I think doing like graph theoretic analysis of a transaction graph on a blockchain also makes a lot of sense. So there's many advantages to using a system like this that could be extended forward into other financial instruments besides just some kind of digital currency or payment system.
Well, let's take that now, if we don't mind, to the central bank. So, Saray, tell us, do you have longer term plans here, or are you purely thinking about this as something that deals with payment issues? You know, what other use cases, whether it is the integration of programmable money into supply chains, or it is monetary policy metrics, do you see coming from this?
Yeah, I think the beauty of the advantage of being a small country is that we can introduce new technologies into the system without too much fears of it disturbing the whole entire system. And I think one of the main reasons why a lot of bigger countries have been studying about this but can't do it, because they already have a very efficient system. And so by introducing something else, trying to be more efficient, you risk of disturbing what you already have. And so countries like Cambodia, we don't have, as I said, it was inefficient. And therefore, this was a good solution to us. Having said that, I think we need to be very specific and very focused on our needs, and not try to be too greedy into wanting too much. So yes, there are possibilities that we could extend this to wholesale. There are possibilities that we can look into more sort of use case of this technology. But I think at the moment, we're just trying to make it work with whatever initially intended, which is a backbone payment system, and trying to connect everyone on the same page.
And in fact, even in our toolkit that we published, we noted that in highly efficient systems, the ROI of rolling out something like this is probably quite low. And so that isn't really a problem space that we had recommended or anticipated that a lot of highly efficient systems would be focusing on. And I think that's exactly right. There's a clear benefit on that particular axis. But I want to get back to something you mentioned earlier, which is this concept of financial inclusion. You'd mentioned that one of the goals is to create more savings account opportunities and things like this. How are you measuring inclusion? And have you been able to measure growth and inclusion since you introduced the system, although I know it hasn't been that long? How are you planning to monitor or evaluate that kind of metric?
So in terms of trying to make money digital, I mean, Michael have mentioned about it. I mean, the main reason of doing it is for transactional purposes. You want to make transaction more efficient. There are three main definitions of money, which is a unit of account, a means of saving, and a means of payment. So these are the main three functions of money. And so I think one of the main sort of benefit of turning it into digital is for transactions. And so when we work into trying to bring people into the formal financial system, realize that to bring them into having a saving account is the best solutions. But saving means that they need to have first money to save. They need to comply with a lot of KYC, and it's keep increasing. I mean, the level of requirement keep increasing every month, and also in terms of credit. So the three financial services that made four main financial instrument. One is saving, credit, payment, and insurance. So saving and credit are already quite difficult to bring them in. So they need to have money to save for saving, and they need a credit, which they may not necessarily need it. So you don't want to push credit onto people, right? But payment is something that happened to every walk of life, and it happened on a daily basis. So if at the initial stage, if you can bring everyone into the digital payment system, it would create some sort of history of that particular person. So you may not have a credit history, but everyone has a payment history. And so if you can sort of capture those information through this digital platform, you create a payment history where you allow banks to better know their customer, and therefore eventually build into sort of a credit profile of that particular customer. And so that's why we're focusing on the payment sort of directions to it. We as well work to promote, access to credit, access to saving account, but payments, we realize that it's probably something that we should focus on. In addition to that, and you were asking about measurement, access to payment or digital payment is not the end itself, it's the mean to the end. Eventually what we want them is that for them to open a proper saving account and not an e-wallet account. So since the introductions of Bakong, it's very early to say what are the progress, but we've seen now that there are more and more cross-institution transactions happening from banks to the e-wallet user, which is a very good indication that we have reached our purpose. So far, if we count all the users of the member banks indirectly using Bakong, we have about 5.6 million users. Those who download Bakong on using the wallet of Bakong itself, we have about 60,000. So that's a pretty good number given the timelines that we've introduced this, and also given the low digital literacy. Again, I mean, there's a lot of assumptions that we need to take into account. When we introduce this, we make assumptions that everyone is going to have access to a smartphone, because obviously you need to download an application on a smartphone, which not really a case in a lot of developing countries. Cambodia in particular, usage of smartphone is not as widely used as this, although the use of mobile phone is quite well, sort of, how you call it, widespread. So we also make assumptions that people understand how to use this digital technology. So there's a lot of assumptions that we are making. So we're not saying that Bakong is going to solve it's a big bang solutions and everything will be resolved within the introductions of it.
So I want to spotlight something that you said, which is this notion that a payments history can provide the kind of information about an individual that can lead to them being considered a worthy credit risk. And that is something I think in the United States, there's a history here of redlining, as we call it, where you can't get access to a loan or a mortgage or whatever it might be because you don't have a sufficient credit history. And the concept of switching over to looking at payment history as an initial step along the path to being credit worthy, I think is so powerful and so important. Because to your point, if we're serious about financial inclusion, we have to meet people where they currently are. We can't anticipate or expect a timeline on which they're suddenly going to be have a different model of how they're engaging the financial system and prevent them from any sort of access because we are awaiting some sort of threshold indicator that they are in fact credit worthy. And I think that focusing on payments is it's such a really powerful concept that I wanted to flag for our listeners. It's really interesting to hear how that orientation has affected the design and the rollout of the Bakong system.
Yeah, I actually think that reinventing the paradigm on that is actually one of the most powerful things that can happen here, mm-hmm. right? Because I think that if we build everything around a credit system, those tropes become the framing for everything, and that becomes a massive barrier if you can't get across that border. And yet there is all these alternative ways now to prove your participation in the economy. However, Sarah, you were mentioning a couple of things there that immediately got my ears up a little bit, because on this program, we talk a lot about the challenges of things like KYC, and this idea of the digital divide, and so there's two things that you came up there. I think I'd like you to maybe drill down into a bit further, and that is like, how does this in any way lighten the KYC load? What can you do with this technology and this structure because I imagine there's got to be some identification process in this, right? So how are you lightening IDs, and how are you ensuring that that in itself doesn't then create these other concerns we have around privacy? It's the first question. And then the second question is, you know, I think it's great that you're up front. You know, we're assuming this is only for smartphone users at this point, and that's, you know, just, you're not trying to sort of basically get this out into everybody's hands. However, you'd be well aware, of course, that that means there is a digital divide. What efforts are there, or will there be underway, to expand access to smartphones amongst the poor who don't have access to them at this point?
Well, in terms of KYC, I would probably sort of, just for understanding's sake, there's two layers to KYC. One is to understand, to know who the person you are dealing with is. And so basically, if this person claimed to be a Cambodian or an American, I mean, is this person really from that country? If I claim that I'm born of, you know, on this date, am I that, you know? So am I a citizen of a particular country, or that I claim I am? So to do that, the only authority that can verify would be in I don't know what is the case in the US, but in Cambodia would probably be the Ministry of Interior, where they would do all the birth certificates and issue your passport and everything, do your marriage certificate, etc. So currently what we are doing at the moment, the Ministry of Interior have a portal where soon, through a couple of sort of channel, we would be able to, Bakong would be able to directly connect to their central database. So whenever somebody come and register for Bakong, we would be able to immediately check it against the central database and then know exactly who this person is, right? So that's the first layer. The second layer of KYC would be for fraud detections and AML, etc. So you would trace my payment behavior, whether it's unusual, whether I'm paying somebody that is suspicious, or so that's, again, would go into a different, so the banks themselves would have to do this. When somebody onboard KYC, the central bank will not take into, will not sort of do the KYC on that individual. We will pass it on to the individual banks, to member banks to do that. So basically, when you download Bakong, what the first things that the customer need to do is to choose which bank they want to bank with, or which e-money provider they want to have a relationship with. And when they click into that, they are required to provide some identifications, and that identification, it will fall onto the banks, the financial institutions, to verify and make sure that they are in order. So that's the KYC that I was talking about.
So that's really just an extension of the existing system, where banks play this kind of important gatekeeping role as the keepers of the record, if you like. Yes. Okay.
Yeah. So you were mentioning about privacies, etc. So the central bank don't hold this account, and we don't take the responsibility on us to do the KYC. We'll pass it on to banks, and they would do it. We won't know who is who. We probably have the serial number of the coins, right, Makoto? We'll probably have the serial number, but we wouldn't know who hold those. So this belongs really to the banks, and the banks would then, they know who is transacting, who is sending money to who, and they already know this without Bakong. In terms of access to smartphone, it's very difficult. I mean, the only things that we can do as regulator is we can't distribute smartphone to people, obviously. But the only thing we can do is to provide financial literacy and digital literacy to the people. So financial literacy is something that we do already on our part of our mission. So recently we have embedded digital literacy into that missions as well. So we have campaign We go from town to town and we speak to anyone who's willing to come and listen, mainly the local authorities, the local NGOs, and explain to them so that they will go on and explain to the people in the village about financing, whether they should take a credit, whether they should open a bank account, how they do that, and what are the questions they should ask. We also add on elements of digital knowledge. So meaning if you have a smartphone and you want to transfer money now, you don't need to go to the bank branch to do this. What you can do is you can download the application and do that. Simultaneously with Bakong, we also launched another system called Retail Pay, something that we have been working in cooperation with the KFTC from Korea, which is one of the biggest payment system provider. And this system provide access, allow payment transfer using USSD technology. So if you don't have a smartphone and you have a feature phone, you can still send money to each other through those technology. However, this system is only limited for banks to banks accounts. It didn't include the e-wallet providers.
Did you say USDC then? The
USSD, which is something that you use on smartphone, you know, the old Nokia phone that we have. You send text messages.
It's SMS format.
Yeah.
So
got it. Okay. Makoto, maybe you could jump in here. Going from this very local kind of retail, push out into the villages effort that Sarah was talking about, and going to the other extreme, and that is like building this out to the kind of international world. And my question is therefore about interoperability. In a future world, is there a way to take this technology, the base blockchain that you're using, and interoperate that with other countries' central bank digital currency systems? And the reason I ask is the Bank of Thailand, right next door to Cambodia, is developing its own CBDC. It is, I think, now working on an Ethereum model that with consensus. Previously, I think it was an R3 system they were looking at. But as I mentioned, at the beginning, they've just entered into this agreement with China and the UAE on a cross-border system. So they're thinking about interoperability right there. How does something that's built on a very different system like the Bakong system interoperate with these others? Or is that even something that we should be thinking about at this stage?
Well, I think it is a priority for NBC. So in the past, they've signed an MOU with the Bank of Thailand to do QR code standardization, which is one important step towards payments integration across border. Also, there's an MOU, I think, with Maybank in Malaysia. So these are for cross-border payments using Bakong. So these are publicly announced. I don't know if Her Excellency wants to talk about these some more, but generally the simple answer is there's many potentialities for cross-border payments. So the digital money here is it's kind of like a bearer asset. So whoever has the keys is able to transact. And so what this means is that domestic banks in Cambodia can make agreements with foreign banks, and then they can they can exchange some funds where the foreign bank gets some of the Bakong tokens, and then they can do currency exchange, for example, in Thailand or in Malaysia or Singapore or wherever. It doesn't really matter. I think from a technical standpoint, this is very possible, but maybe Her Excellency has some more details yeah.
Yes, I think from a technology perspective, it's no issue. I think we can always find a way to do that. I mean, what is difficult is probably the policy decision. Do you want to do that, and what are the issues? Something that we've been exploring with a commercial bank in Malaysia is that this has come about from something that is very personal to me. And this is trying to figure out, because Cambodia sent a lot of migrant workers to Malaysia, and mostly are women, so as domestic workers. And so what I wanted to do was, how can we help these women remit money back home easily? So a lot of the times, when people remit money home, they would remit it to a member of the family, and the member of the family sometimes may misuse that money. And that happened to the mother of my adopted son. And then she became very mental because the money that she sent home weren't used for the purpose that it was supposed to. And when she fell sick and she went back home, the family had nothing and they went back into poverty. So a lot of her working time wasted. And so what I wanted to do and experiment with Malaysia was that how can we help the women migrant workers access to bakong, and then send money back home to the school, to the hospital, to the utility company directly, anytime, any day, free of charge, because it's supposed to be peer-to-peer, right? And so we were exploring with this commercial bank, see whether they can be our agent, meaning if the migrant worker receive their salaries in ringgit, and they want to put money into their bakong wallet, how would they do that? Whether the bank would be willing to exchange their ringgit into US dollars or into our local currency, and then send it into the worker's wallet account so that this worker can remit money back home easily. And so as we were exploring all this, so that was to me, it was a great idea. It was easy, right? And so as we were exploring through all this, I mean, we came to a very big stumbling block, which is the KYC. Because whenever you send money cross-border, what you need to know is who is the receiving end. And if you were to allow this peer-to-peer and so straight through without going through any intermediaries, country like Malaysia would not be able to know, where the money, who is benefiting the money. From Cambodia, we probably know because, the person who holding the bakong, we have all the informations, but country like Malaysia, they won't be able to, so they will have to work with their regulator how to overcome that. The other issue also is that, if you have some measures on your capital control, and I'm not saying that Malaysia has, but if a country were to have all kind of this measure in place, then it will be very difficult to control that because can so quickly move across the border, and so that's that's the point that I mentioned, that it's come down to the policy and not so much about the technology.
I think it's so incredibly powerful to hear that story and to hear what you had in mind as you were imagining this system, and you can see like how different that orientation is from thinking about how do we make interbank settlement payments more, marginally faster, right? Like the orientation to those problem spaces is so profoundly different. And, what I would say, and something we talk about on the show a lot, is how is this technology benefiting actual people? And I think you're giving an example of how, right, of how this kind of the use of a blockchain and kind of the creation of this new network of bakong connected institutions can really support actual people, like people who are struggling with real problems. And so in any build of any project, there are moments where it all just seems futile, horrible, incredibly challenging, just impossible. And I'm very curious if there were moments along the way where they were just, what was the hardest thing? What was the hardest thing about this entire process? Was it convincing banks to join? Was it the decision around technical design? Was it getting people to, initially use it? Like, I'm just really curious what you found, maybe a stumbling block where you questioned, like, is this actually going to happen? I'm curious to hear from both of you what such moments might have been.
For me personally, I'm not a technologist. I can barely handle my Microsoft Office, right? So the challenge was trying to understand what it is. But I think the biggest challenge is to convince our own management to go ahead with this project. There's obviously generational gap between our boss and the team who are working on the project. And I remember, I think I said this before, the first time we went to our management and we explained about, blockchain, and the first questions that our governor asked was, so what is blockchain? And then I, who don't know nothing about the technology, started with, it was created by this anonymous guy in Japan. And and then he looked at me, and I know immediately I gave the wrong answer. So anyway, that's that. Then, and again, it got them very skeptical about what going after that. And so when we said, well, we nobody has done it before. We are the first one who's going to test it. Of course, we had to convince the management that that the risks were calculated and that we've discussed with the industry and that they're willing to go on board with us and that everyone is on the same page. And so that was probably the most challenging, and it's very, I can understand, you know, when you come up with new technology like this and get a certain I would say senior people to understand, it's very difficult.
I can certainly respect that. Makoto, were there technical issues along the way or challenges that seemed really hard to surmount?
Well, building technology, you know, it always takes a lot of work. There's no way around it. You just have to put in long hours and, you know, work hard. And it took a couple of years, I guess, the development to get the initial system ready for the pilot. And there's no, like, I would say, single technical difficulty that was overcome. It's really, you know, everything had to be planned. And I think the biggest problem was not so much technical as it was harmonizing the potential of the technology with the regulations. So the banking supervision side and what the rules are for onboarding users and what kind of currencies can be supported, what the daily limits are for transacting, what's the KYC process. All these questions took a long time to answer, I think. And that's just because banking is really complex and it's getting more and more complex. There's always new rules. And I think a lot of the people in the regulatory side were a bit conservative about a system like this because it is kind of new. It makes a lot of sense that people would be a little bit, you know, wary about allowing users to do too many things. That being said, I think all the risks that were taken on the regulatory side and technical side were really, you know, very moderate and very, you know, conservative. And so, for example, like related to AML risk, that was a big discussion that was going on for a while. But really, you'd have to be pretty crazy to do any kind of financial crime in a system like this because you have a permanent record of transactions, right? So even if it's pseudo anonymous from the central bank standpoint, you know, somebody knows the identity, and even if you faked your identity or did something really bad, you know, like selling your account or something, the transaction history is permanent. And so this type of analysis or different types of analyses can be done later on to de-anonymize if needed. Obviously, that's a very, you know, touchy regulatory subject, but I think regulators don't have to be as conservative about the system as they would be about something like cash, which is, you know, much harder to trace. And especially for cross-border payments, a system like this can give a lot of certainties to foreign banks because you can do a measure of traceability once the transaction is complete, which you don't have with cash, right? So I wouldn't say there was any like really major challenge. I mean, building systems is hard. It's hard work. You know, I had to stay up many sleepless nights and travel the world many times. But I mean, it's like a normal type of thing when building any type of software. So a lot of times in software, every time you build something, it's something new, right? It's not like building a bridge or building a house. Software is really complex. It's the most complex artifice that humans create, right? So it just takes lots of hard work and good processes, which fortunately we were able to build, and you know, NBC and all the commercial banks were very, very helpful in, you know, testing the system and, you know, giving feedback, and I think having that kind of support, especially from the top management, I don't know where a system would have been without support from higher ups in NBC, because it, you know, takes a lot of political clout to push a system like this through.
So just one last question here for you, Sarah, just to bring it back, if we can, to, you know, the people on the ground. And we talked about, you know, the outreach that you've done to communities around Cambodia. Can you just give us a sense of what, in general, the public response has been? Are people excited, interested? Are they fearful, right? There's often a concern when new technology comes along that you know, we here in the United States, we get plenty of conspiracy theories about all sorts of things, whether it's vaccines or, you know, digital tech. Are you encountering a generally positive response, or is there skepticism? What's the position?
I think, and then again, this is another benefit of small countries, that people don't really care whether it's blockchain or else. What they care is that, can I transfer money from this bank to the other bank smoothly and cheaply, and and with immediate effect. I don't have to wait the next day. And so people were actually, we've got very positive feedback on the system, and I don't think they realize this is blockchain. I don't think they realize, that people are actually looking at us and see, how it is going. I don't think they really care about this. But generally, yeah, the adoption has been quite great.
I couldn't think of a better place to close. I think that, as I often say, we'll know that blockchain's really arrived when no one's really talking about it anymore. And again, the average person doesn't need to ever understand how blockchain works. They need to know what it enables. And in this case, I want to commend both of you for the magnitude of this project. I mean, it's just an absolutely incredible undertaking, and being so early in the process to have the conviction to go forward with this, and with the orientation in mind of really thinking about ultimately how you can create a more inclusive economy and how you can propel and accelerate the economy of Cambodia, I think is just an extraordinarily powerful orientation to this project, and one that is sadly unusual. So congratulations on this massive achievement. It's really exciting to see how this technology can create a better world, and how you're already doing that. So thank you so much to our guests, Her Excellency Seri Shea and Makoto Takamaya. And as always, my co-host, Michael Casey. And that's a wrap. We'll see you all at next week's episode.
Thanks, everybody.